Hi, dear traders. Nice to meet you here again here on, let me just share it here. Great. I'm really happy to have. Welcome to another session here on the YouTube channel from SabioTrade. I'm really happy and glad to welcome you here in this show. I guess you can hear me and see me. And today I'm sitting because today we want to have a mix between slides and kind of explanations about avoiding common mistakes in trading assessments, and of course, I want to show you two trades we did in intraday trading today here on the platform from Sabio Trades. So I'm really happy to welcome you here. So you can give us a like if you want. And if you have any questions, then feel free to type it into the chat box. Salvador, a wonderful good evening. So I guess we have to wait until traders will come in. And in the meantime, I can share my screen exactly. So let's see. Here we go. That's the one. Great. So now you could see the slide. And yeah, that's our topic for today. And I would be really, really happy and I would love it if you join our today's session with any comments in the chat, because I can see it on the upper screen. If you have any questions about trading, please feel free to ask. We are here to join you, to entertain you. But more than that, it's my job to educate you and to teach you by sharing my story and my insights and my experience in trading. So if you have any questions, then please leave a comment in the chat box. Or if you watch this show later as a recording, then please feel free to leave the comments below this video. We will come back to you with our answers. So, avoiding common mistakes in trading assessments, that's our topic for today, especially here as a real or regional event here on Sabio Trades, here on the YouTube channel from Sabio Trade. It's me, Markus from How Trading. I do trading for a living for 25 years now. I experience everything. I have my 4 mentors and teachers. I love them because without my teachers, I would not be here to teach you and to share my insights with you. So, but I have a lot of experience, and that's the reason maybe why it put me into the spot to share this special topic for today: avoiding common mistakes. For that, first of all, we need to figure out what are kind of mistakes you could make in trading. And afterwards, we can talk about how to avoid them and how we can do good things in trading to make money. Especially if you want to go through the levels here on Sabio Trade, then you have to avoid common mistakes. Because, and this is one of the first teachings today for you, we are working in trading in a game of probabilities. You know, we have no guarantees. And if we have minus trades plus mistakes in trading, then there is no chance to make money with trading on a long run. So if you're really interested on becoming a really successful trader on the long run, then you have to learn how to avoid common or basic mistakes in trading. So that's the first part. We want to go through a couple of slides, and I want to just share a couple of ideas and insights with you. So when it comes to trading, we need to understand a couple of things. So what is it? Let me share a little bit with you. First of all, we have to understand that we are at the right edge of the chart. Yeah. And we don't know if the market is going up or down. And of course, we cannot influence it. But today, almost everyone is able to trade in the international markets. You can trade shares, you can trade commodities, and you can trade forex market. A couple of years before, 20 years before, it was not able to trade in forex market because it was only allowed for banks. Usman, good evening also. I'm really, really good, and I'm glad to have you here in our today's show. If you have any questions, let me know. We can talk about it because it's your show. By the way, on this fact that everybody, if you have a small account or a big account, yeah, it is able to trade into the markets. Oh, from United Arab Emirates. Greetings to the Emirates here from Lower Bavaria, deep in good old Germany. Yeah. So even you have just a little bit money, then you can open a real account with small money. And at the best, in 2023 and now in 2024, we have the great opportunity to invest just around about 99 euros or dollars. And then you can open a $20,000 account here on SabioTrade. And then you can trade with $20,000 for just one investment of $99. And I think this is a really, really great opportunity because even you have if you don't have that much money to open your own account, and it's better to trade with $20,000 than with a small account of 500 or maybe $1,000. So you should really go to the homepage on SabioTrade and work with us and with really big accounts. And then you have more freedom. You have way more chances to make money. Yeah. And that's the big point and the big deal. We need to understand that trading will never support you with securities or guarantees. Yeah? And this is the big issue. That's a big deal because you don't have guarantees in trading. We have to work with probabilities. And that's the sentence I was creating for my community. If you have no guarantees, you have to work with probabilities. It's like a little bit of song. You can sing with me together. If you have no guarantees, you have to work with probabilities. Or we can change this if you don't have guarantees, or if you cannot work with guarantees, you have to work with strategies. And strategies are undercut from probabilities. So in trading, you need to understand this, that it's an inevitable thing that you have to work with probabilities. You don't have any securities or guarantees. Really? Ha. It's one point I can share with you because that's a really interesting part, because in the probabilities, there is your guarantee. That's a cool thing. That does not mean that you make money, that you have a guarantee to make money with every single trade. But if you avoid making mistakes in trading, then you have a guarantee in the probabilities. Because if you have a cool strategy, if you have cool rules, the strategy in trading is given. You remember what I told you last week? If you have forgotten or if you missed it, then you can go to the YouTube channel here on Sabio Trades and watch the shows from last 2 weeks, because now this is today our third appointment. The strategy in trading is given, ladies and gentlemen. Yeah, buy cheap and sell expensive. Yeah, or in trading we can say vice versa. Yeah, buy cheap and sell expensive, buy cheap, sell expensive and buy back cheap. Yeah, but this is the given strategy when it comes to trading. What do you need right now is you need to have rules for your entry and of course for your exit. And if you would not make any mistakes, then you would have a guarantee in your rules. But first of all, we need to understand that you basically don't have any guarantees that every single trade you open on the right edge of the chart, you will make money. This is not possible. And as a consequence, you should know that you can lose money with trading. And in the worst case, more than you expected. And you really should be aware of that. And as that consequence, I guess you know, you and me, we all of us, we know that numbers, that's around about 80% of all traders lose money with our modern style of trading. By the way, even Albert Einstein, Isaac Newton, there were investors too, and they lost bunch of money in their time because they thought they were so smart they could do it, but they realized they could not. Even a kind of intelligence is not a guarantee that you can make money with trading. So that's a couple of key facts basically about trading. So now we need to understand, to avoid common mistakes in our trading assessments, why around 80% of all traders failed. Yeah. And of course, that's the official number. There is a hidden number or a dark number, we call it dark number, on a long run from 3 and 5 years. Then the number of failed traders way more than 95%. 80% is an average of 1 or 3 or 6 months, but the long-term number is more, it's around about 95%. Yeah. So why? We need to figure out why. First of all, real and long-term success in trading is based on 90% psychology and 10% strategy. Could we say that in that way? Kinda, kinda. The smallest part is to follow the strategy, buy cheap and sell expensive, and to have rules for your entry and your exit. And I told you last week, you have to answer at the right edge of the chart. You have to answer the 5 magic questions: what to do, how, when, where, and why. So if you cannot answer those 5 or one of those 5 questions, you are forced from your brain to make emotional decisions. So 90% psychology means you need to understand how your physical brain is working. And if you don't have an education in neuroscience, yeah, it's really hard to become a very successful trader. So, and such videos you only will find here on SabioTrades, because it's my job to share this knowledge with you. But it's just only one time a week. If you want to come, if you want to become faster, or if you want to have a faster development, then of course, let me tell you this one, you need a teacher and you have to invest in your teacher. So finding basically rules or the strategy is not the big deal, because we have many profitable setups. So again, the strategy in trading is given. Yeah, buy cheap, sell expensive, vice versa. But the setups, or we call it the rules, yeah, that's your individual part. So for example, I'm a trend follower. I just follow the trends. I don't predict, I don't analyze, I don't guess. I don't gamble. I'm waiting until I can see it's starting and the movement is starting, and then I follow. Follow does not mean I'm in front. Follow does not mean I need to know what's coming next. Follow me means the big smart money is going in front of me and I follow, which means I have to let them passing by and not see them coming and start to run. By the way, I'm the first in the market. I am the first one in the market. I catch the high, I catch the low. This is not what a trend follower is doing. He is letting passing by the market or the movement and then passing by and then follow. And that's the point. So, but there are many rules and setups outside there. Crossing moving averages, patterns, any candlestick formations like a triangle, support resistance, double high, triple high, divergences, all that part. And in this whole universe, you have to find your own rules and your own setup. But the setup must follow the strategy which is given in trading: buy cheap, sell expensive, vice versa. Yeah. So you need to find, and this is all the basics to avoid mistakes. If this is not given for your trading, you must make mistakes. And that's the big problem in trading. Yeah. So, first of all, you need to find. Good evening, Juan. Greetings to Mexico and greetings here from Germany. So, simple thing: find your own tradable markets and find your time frame. So, what does that mean? So, for example, if you have here a prop trading account here from $20,000, for example, then you cannot trade 6, 7, 8 markets at the same time. It is not possible because we have a strict risk management here. And if you lose with the wrong money management, 3, 4, 5, 6 losses in a row, yeah, then your account is crashed. It's not a private account because your private money you can trade until zero. Yeah? But here with prop trading, here with SabioTrades, and we have really good conditions here. Yeah, there is just a limit you can lose. So therefore, you need to find your market. For example, in my Dowhow family, in my community, we trade 3 days a week, and today was the first one. Tuesday, Wednesday, Thursday, we trade DAX, the German index, in 5-minute chart. Everybody can trade the DAX. Even you live in Mexico or in UAE, in the Emirates. Yeah, you can trade here on SabioTrade. You can trade with me together the DAX in 5-minute chart, for example. Yeah, but only if you have time the entire day. If you're a part-time trader, yeah, and for example, you trade 9-5, yeah, from 9 until 5, yeah, and you come home, then I can tell you we will not make another trade today because we did make today 2 trades in DAX and we made money. Yeah. And now there are no signals. So it's possible that you come home from your work 9-5. And if you think you can make trades right now, only if you have a setup. Just jumping in because you believe something, or maybe this could happen, does not mean rules. Yeah. So, and that means, ladies and gentlemen, that you need to find a daily routine for your trading with your rules that fit to you. So again, I'm a trend follower, even in 5-minute chart. It's cool. I have clear rules for my entry and I have exactly clear rules for my exit. Yeah, because it's my job to answer the 5 magic questions at the right edge of the chart: what to do, how, when, where, and why. And for that, you need clear rules. They are set in stone for your entry and for your exit. And these are mistakes. And that's the reason why around 80% and more traders failed. They have the wrong markets. They have the wrong time frame. They don't have a routine and they don't have rules. Yeah. And they are not educated to control their emotions. I'm quite sure you heard some videos online that any hosts will tell you the point, yeah, in trading, you have to turn off your emotions. Or yesterday, I read some comment on one of my videos in German language, psychology off. Guys, psychology off is not possible. You cannot turn off your emotions. As long as you are a human being and as long as you're not a robot, you cannot, absolutely not, turn off your emotions. And this is why you have to figure out the importance of the psychology, or I would say the psychology and the physics, how your brain is working, not the mindset. In the first place, you need to understand how your physical brain, which is between your ears, how this is working. So let's talk about how to avoid common mistakes in trading. But first of all, we need to know which one we need to avoid. And maybe you all feel a little bit familiar with that mistakes. Yeah. So first of all, we need to understand when we have to work with probabilities and not with guarantees. That means in this law of probability, the law of coincidence is included, which means the market is random. Even you have your rules, and you know you have rules which is with a good probability way more than 50%, then you know the order, your signals are random. They will show up by chance. And you will never know if the next signal will bring you money or you lose money. So, and let's say out of your first 6 trades, only one works. Today in trading, we had a good probability because today we started a completely new project in intraday trading, DAX 5-minute in my Dowhow family. It's not for free, by the way, but you can afford it. You can come in because we do it in English and in German, by the way. Yeah. And we started today with 2 positive trades. Yeah. So, but I know tomorrow, I'm quite sure we will have a loss. It's by chance. The seasonal trader will know that it's a matter of placing a large enough sample set of trades for things to net out. Which means you have to take every single signal because you will never know if the next trade will be a winner or a loser. So the junior trader or the beginner, stuck in his analysis, and he is paralyzed by his analysis of the charts. Yeah, he tried to change the system other before it has time to bloom. What does that mean? So, for example, I know it from my numbers. For example, the trend following strategy and the rules for that have a probability of 70%. What does that mean? Whenever it comes the right edge to a signal based on the Dowhow rules, then I know from 10 trades 7 will be a winner. I know that. But I don't know in which order they will show up. I can have 1, 2, 3 profits in a row. And then I can have 1, 2, 3, 4, 5 losses in a row. And then I can have 1, 2, 3, 4, 5, 6 profits in a row. Then I can have 1, 2, 3 losses in a row. Yeah. And of course, maybe 1 profit, 1 loss, 1 profit, 2, 3 profits if you have a positive strategy. Yeah. And 1 loss. Yeah. And at the end, if you would do it, if you go through, then at the end, you will be profitable. But the point is that a junior trader or a beginner change the system after 2 or 3 or 4 losses in a row. Even he would know that we have a probability of 70%. And before the system can bloom, yeah, and can bring the big profits, he changed the system. And that's the reason why we call this the circle of, the circle of suffering. Yeah? You change before your strategy can bring you to the good trades. You change the system because you are not able to bear 3 losses in a row. Maybe you have a wrong money management. This is one of the biggest mistakes in trading ever. Understanding that the market is random is probably the key tenet of becoming profitable. This is the reason why you have to take every single signal in trading. The only reason the market will respond to my analysis is based on whether or not the other active traders who can influence the movement of my stock are on the same page as I am. So the point is, and this is what my teacher taught me over the years and years and years, he get never tired to tell me this one: dependent origination. We are dependent on other market participants. And that means if you open a trade based on your signal, your price can only move up if you have other buyers. And the price can only going down if you have more sellers. They will buy or sell after you. If you're the first one in the market, then maybe you can feel cool. But if there are no more buyers or no more sellers, the market cannot rise or decrease. It is not possible. So you are dependent on other market participants. And then you should realize that only smart traders know the system of buying cheap and selling expensive. So guys, if you trade against the trend all the time because you think the price cannot go higher, yeah, then you give your money to the experienced and well-known traders. Really, really good traders are trading with the trend. Yeah. So remember, it only takes one person somewhere on this planet Earth to decide that a stock should go higher or lower. If there is a Warren Buffett or a George Soros or a Bill Gates, and they decided to buy a share, then they invest a lot of money, and it needs one person to bring the domino effect, started with buying, and all the others come afterwards. But you and me, we cannot influence the price. It is absolutely not possible. Huh? So there's only one person with enough money Yeah, and this is what we need to understand, my dear listeners. We are dependent on other market participants. So, and I'm quite sure that you realize that the one thing the internet provides as a plethora of market analysis and opinions. There are literal hundreds, and today I would say thousands of sites that will tell you where the market is going up or down next. Yeah? So many opinions. You can just make the test and you Google it and you type in trading. Then you are overwhelmed with offers, opportunities, trading ideas, and a plethora of market analysis and opinions. And if you are a beginner, you think you can trust, any newsletters or any Telegram groups or WhatsApp groups. You really think 90% of all traders would fail if this were working? Really? Why are only 1% really successful in trading? Why? Because they had teachers. They had experienced teachers. If you think you can teach yourself in trading, then you will need a lot of money and a lot of precious lifetime. And I'm not sure if you have both of them. And then you should know this copy paste system is not working. If the copy system were working, why we still have 80% of failed traders? Why? Can you give me an answer to that? You see, it's not working because every system is different. And remember, we never know what the market is going to do next because we cannot influence the market. We just can follow, or as many beginners try to do, to predict the market. But this is not my job as a private trader. A job of the private trader is to buy cheap and sell expensive, and for that I need rules and not any perceptions or predictions. Yeah. Another issue we deal with is the noise in the market. Yeah, we have so many numbers. Yeah, so we have so many economy data. Yeah, and of course, only you shut out all the noise, your equity curve will never look back. The reason for this is because you can interpret the market by yourself and no longer rely on other people to solve your problems. Funnily enough, as you can see here, yeah, David, greetings here. Thanks for being here. Funnily enough, this is the same reason to become successful in life. Guys, copy paste is not working in trading. You have to learn with a good teacher. You have to book a teacher. You have to find a teacher who will be your teacher for the rest of your life. My teachers are my teachers for the rest of my life. A good teacher will support and accompany you for the rest of your life. This is the only way to become successful in trading. And don't trust to Telegram groups or whatever there is. We have a really trustworthy broker and prop trading company here with SabioTrade. And my colleagues and me, we do the best to give you insights. You should not copy paste my system. You should learn it. What does it mean to be a trend follower? What does it mean to have clear rules? And it makes no sense to point out to other people and say they are guilty for my stupid mistakes. This is what people love to do in their life, you know? yeah, to blame others. Yeah. Oh, he said this to me. Oh, he was teaching that. He did this. No. Solve your problems by yourself. Learn trading with the teacher. Understand the logic in the market. And then you have a great chance to become successful in trading. But never trust blindly other people in trading. Maybe you remember the last show from last week where we talked about preparing your assessments, or in other words, to have a business plan. And, there was a really interesting quote from, I've forgotten the name. If you don't know where you want to go, you will wonder yourself where you will come out. Mark Twain. I remember Mark Twain. Mark Twain said this. If you don't know where to go, you will wonder yourself where it ends. So trading without a plan is a really worse mistake. Really. You need your business plan. As I mentioned already in another slide, which market, which time frame, which rules, yeah? Did you have an education in neuroscience, psychology, yeah? Trading plans should act as a blueprint during your time at the markets. And this is not the first time or the last time that I mentioned this. When it comes to trading, basically, when it comes to trading at the right edge of the chart, ladies and gentlemen, then you have to answer 5 questions. What to do, how, when, where, and why. Yeah? And if you cannot answer those questions, you don't have a plan. Yeah? So strategy is given. Then you need to have a time commitment that trading is a serious business. Yeah. After a bad day on the markets, yeah, don't throw your plan away. Believe it, because you work with probabilities. Because a trading plan should be the foundation for any new position. Yeah. Why you should change your system even you have a minus trade. Minus trade is not a punishment. Minus trade just only says, okay, it was not the perfect time right now. My rules were there, but it was not the right time because I'm dependent on other market participants, ladies and gentlemen. Yeah? That means a bad trading day does not mean that a plan is flawed. It simply means that the market, when moving in your direction, you were anticipating and you were expecting during that time period. Again, guys, what does that mean? Let me explain this again. You are at the right edge of the chart and you open a trade. You cannot know it's going up or down. But a minus trade, let me do this. A minus trade. Minus trade. What does that mean? Guys, a minus trade means 2 things. Why is there a minus trade? So first of all, the point is a minus trade is dependent on a shortcut market participants. You are dependent on other market participants. That does not mean that you were wrong. So a minus trade means you are dependent on probabilities, which means you don't have an influence. Yeah. You cannot influence the market. That means a minus trade shows up because about the wrong time. Guys, a minus trade, if you lost money, in case you cut the loss, by the way, which is another topic, yeah, means it's not a punishment. It does not mean that you were wrong. It does not mean that you were wrong. Because you cannot influence the price. You can do nothing that the price is going up or down. Because you are dependent on other market participants. And if the rules are there and you follow the signal, but you have a minus trade, it just only means that the time was not right or correct right now, but not that you were wrong or your strategy or your rules were wrong or they are flawed. No, just on the time. What does that mean? It's not a punishment. Minus trade is a happy thing because every minus trade brings you closer to the next plus trade. It's not a punishment. You just did not catch the perfect time. So find the next time point, and then you can do it again. And with every minus trade, you will come closer to the next plus trade if you don't make any mistakes, by the way. Yeah. Yeah, of course. David, I will show you my homepage at the end of the webinar. Is that okay for you? And at the end, then I will show you. Okay, so give me just a yes or no. If you stay until the end, I give you the website, and we have a flash sale offer for the moment. Maybe it's one thing for you, and then we can trade together. Yeah. Okay. One of the biggest trading mistakes is not to cut the loss. Yeah. So the temptation to let losing trades run in the hope that the market turns can be a grave error, and failing to cut losses can wipe out any profits a trader may have made elsewhere. So this really simple sentence, cut the loss and let the profits run, is everything you need to know. But it's the hardest thing to cut or to close the gap between knowing and doing. It's the most important and the most challenging thing in trading. And people do it differently. They cut the profits and let the losses run in the hope that the price or the market turns out. And this is what I teach my students every day. Guys, if the price is not working in your direction, why you should wait? For what do you wait? Hope. Hope has nothing to do with mathematics and logic. Hope is the playground only the idiots playing. Hope is for losers. Mathematical logic is for cool traders. Hope is for losers. So if you want to be a cool trader, then follow the magic and logic and the mathematic logic. Only a good teacher can teach you that. Otherwise, you will hope, then you are a loser. Yeah. So the point is, a minus trade, cutting loss, does not mean you are wrong. Does not mean your strategy or the rules are wrong. It just means you did not catch the perfect time right now because you're dependent on other market participants. Yeah. So, and there's just only a little point in trying to ride out temporary slumps in the market, as all active positions should be closed by the end of the trading day. You don't have to do that. Yeah. You can trade from Monday to Friday if you want, 24/5. Yeah. People want to close their positions before weekend, others don't. Yeah. But if you realize after your entry The price is not working for you. Cut the loss immediately and wait for the next signal in case you have signals, right? Okay. So, money management. Yeah. While some losses are an inevitable part of trading, stops can close a position that is moving against the market at a predetermined level, which means you need to know, otherwise, no. Before you start the trade, you need to have a plan for your exit in profit case and in loss case. Trading, guessing. Oh, what should I do with my position right now? Oh, it's going to profit. What should I do? How it's going to loss. What should I do right now? Guys, it's not trading. You need to have a plan, a exactly plan where you go in and where you go out. You could also attach a limit to your position to close your trade automatically after it has secured a certain amount of profit. So you need to know what you want to invest in your trading idea before you start. If you have a 20,000, put a stop loss. Exactly, David. But you need to know before. And of course, when the trade is running, what's about the trailing stop loss? A plan. You need a plan because the stop loss protect your trading idea. And it's not a personal punishment. It just shows you, okay, the time was not correct right now. It protects your trading idea. And if your idea was, or based on your rules, and you had the idea the price based on my rules should go up, and the price is going down, why you should keep the position open? Why? Cut it and make a re-entry at the next time. And you see, consequences of these mistakes in trading, you must have more loss than profit. You must. There is no other chance. You will be exhausted the entire day or the entire time you trade. And believe me, you will have a lot of stress with family and friends. And I lost my family because of trading, and I never came back. Losing your freedom and your inner balance, your inner center. And by the way, you waste your life if you make all those mistakes. So now the final question, how to avoid? How to avoid those mistakes we were talking about. Point number one, switch your focus from making money to be a consistent trader. Let me repeat this sentence because it's so important. Switch your focus from making money with every single trade to consistent trades, having rules for your entry and your exit. And then you can stop worrying. Then you can start living. Yeah. What would you say is a good stop loss to put in on your trades? Will that be determined by the resistance and selling points, the ceiling points? No. I will show you after this, I guess after this slide, I will show you, for example, my 2 trades I did in DAX. Then you have to, then you can understand a little bit. It has nothing to do with resistance or with support and resistance. Yeah. So stop worrying, start living. Yeah. Live in now. Focus on today rather than constantly worrying about the past and the future. Be focused on your trading plan and find your real why in your own life, because money is just a means to an end. Money cannot make you happy. The things you can do with money, that can make you happy. But money by itself is just a means to an end. No more, no less. Yeah. Find your big 5 for life. The most important 5 things in your life that you want to achieve. If you want to become a cool trader, you should really think about that part. Oh, I see. That's the wrong color. Just give me a sec. Here we go. So conclusion, and then I'd show you my 2 trades for day, and then you will understand what does it mean to have rules. We understand that almost everyone is able to trade today, but we know we need a strategy, and the rest is happen between our ears. Yes, about our ears. Yeah. So the question is, can you stick to your rules? Like you can see it here. Can you stick to the rules all the time, always? You cannot make copy paste. You have to understand what trading really means. And then we understand stops should protect our trading idea, and they are not a personal punishment. And now I show you how to follow a plan. Yeah. So as you can see here, for example, yeah, we did 2 trades today. I show you index 40, not 30. And you see, we made just a small position, 31 and €1.17, round about 33 euros. How did we do that? Guys, we are trend followers. And by the way, there was another one. You see that? It's cool. I love that. You see that? That was a cool one. 370 euros. That's what we are doing Tuesday, Wednesday, Thursday in the Know-how family. And you see, we had losses, 4 or 5 losses in a row. With every loss, the next profit must come closer. So what did we do today with our 2 profits today? So simple. We had rules. We were trend followers. Yeah. We were trend followers. So our first entry was here in the afternoon, close to lunch, German time. Why? Because we have rules. Rule number 1, we need a trend. So as you can see, there was a trend. Starting here, movement, correction, movement. Then the second correction brought me into the position to follow the trend. Then we need the correction, and then we opened the first trade. Yeah, you can check it here in position. And it was here, no, this one. 11:16, 17,661. And we closed at 696. That was 17, 10, 15 points. 15 points. And there the other one was 1 point. So how did we do that? We followed the rules. So the first entry was here. Yeah? It was the second trend arm. We were waiting until the movement starts. And before we saw the trend continuation, we were in. So we followed the move. And after we had this move, my first stop loss, David, was here, below that point. Because I'm a trend follower, I knew when the price, for example, is falling down, then there at this point, my trend will break. And then I don't have to open then I don't need to be in the trend already. So my first stop loss to protect my trading idea was below that last low. Of course, you need to know how to draw the trend. This is what you'll have to learn with a good teacher. Without a teacher, you will never learn how to draw the trend because then you are dependent on your perception. And your perception is not mathematic. You have to understand that. So after the price went up, we trailed the stop loss. We had the trend continuation here. We trailed the stop loss into the profit to make the trade safe. It's good for the feelings. And then, yeah, the price were correcting. Yeah. Then it started to continue again, but it failed. Then we trailed the stop loss to the last low, and then we got out here. It was a positive and profitable trade. Yeah. We don't need to figure out the holy grail. We just follow the trades. We follow the rules for your entry and exit. So 15 points, yeah, with one trade. Yeah. So lovely. Then, of course, we had the next correction. There was the high point. We saw the next correction. We saw the next turnaround because there was the correction was coming to an end. Then we opened the trade here again. Yeah. And then the price jumped up here. Then we trade, or the stop loss was here. Then, of course, we trade the stop loss into the profit, and then the price, the trade stopped out here. Huh? Of course, we always have trailing stop loss. Yeah. The first stop loss is my worst case scenario. So, for example, I open the trade and then I got a call. I have to go to a meeting. Yeah. Or I go to lunch, or I fall down from my stairs. Yeah. Which means I cannot act. I cannot react. That's my worst case scenario. It's always below the last point, the last correction point 3, where the trend will break. But if I'm available and I'm here, of course, I am most of the times, then of course, when I can see, I have the next move, I trail my stop loss to the profit zone. So I cannot lose money anymore. It's good for my inner balance because now I say, yeah, let's see. Let's see if the market will turn around, yeah, or will go up to the next trend. And then because I don't care. Because if I have my stop loss in profit, I don't care. Because I let the market decide how much money I get with one single trade. My job is to follow the rules and to follow my rules for the exit. Yeah. And as you saw the other one with the 320 euros, that was a long running trend. And I catch that trend. And the market gave me that money. I was not predicting, I was not assuming, I just followed the trend. And this is what my students learn in my course and in my daily, day by day job and teaching in 5-minute chart and beside on other accounts. Yeah, in hourly chart, 4-hourly chart, daily chart, because you should always have both. If you can afford intraday trading and of course one account with 4-hourly charts or daily chart that you can build up an account for the long run, and the intraday trading is for monthly income. And this is what we are doing. Yeah. So my job is round about 100 points every week. If you get more, it's cool. If you get less, also cool. In average, 100 points every week. And that means 2, 3, 4, 5, 600 euros or dollars every week or every month. And this is what you only can reach with clear rules. We don't work with any resistance, support, bullshit, because this is just perception. Trading, ladies and gentlemen, is a game of mathematics. Yeah. And that's the point. Okay. Ladies, thank you very much. Oh, I want to show you the homepage. Sorry. Let me share it again. Here we go. So let me see here. It's not this one. It's not this one. Here we go. Here we go. David, if you go here, you see it in the stream here on dowhow-trading.com, and then the English part, dowhow, dowhow-trading.com, and then you can click on the link and English button, and then you will find here the flash sale. Yeah, and here we have special offers. You can go to want to see the offer, and then you see only the course for $7.99. Yeah, or into the community, inclusive intraday trading, just for this amount. And then I teach you personally, not any team. It's me, what is teaching you every single day. Thank you very much, guys, for listening. Thanks to SabioTrade that we could do this, and follow and subscribe the channel from SabioTrade. And then we'll see each other next Tuesday again, or maybe in a community with an account of SabioTrade. And then we go together through all levels, and we will make a bunch of money together with you and me. Thanks for that. As always, I wish you a good evening. And as always, have courage and be kind. And may the force of the logic be with you. See you next Tuesday.